SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today is Dr. Jim Willie, editor of the Hattrick Letter found on GoldenJackass.com. Jim, thank you so much for joining us today.
Oh, it's a pleasure being on.
All right. Well, I'd first like to discuss, I was recently reading a Times article, and I'll put a link to it in the description, and it was pointing out that only about 15% of capital from the U.S. financial institutions goes towards funding businesses. And in the past, this was over 50%. So the percentage has gone way down. So what is your perspective on this transition we have seen?
It's basically destructive. It's destructive because the main credit engines for the United States and the economy are not working toward building capital. Capital formation is just not happening. What we're doing is we're getting deeper and deeper into casino formation. We're getting deeper into financial engineering commitments. We're getting deeply involved with rescuing financial engineering platforms that have been destructive. So, yeah, in the past, you'd rely on the big banks for funding a new factory, a foundry, a car assembly plant, a farm, a solar generating plant, electric utility, something tangible. Now you have the banks, they've openly declared that they don't believe that the U.S. economy has a whole lot in the way to offer for credit-worthy individuals, credit-worthy companies. This has never happened before. For me, I'm hesitating to say, what we're seeing is the death and destruction and deterioration in the final elements of the U.S. economy. When we went to QE in 2012, Elijah, we declared the banks too big to fail. We preserved the big hollow reed tower banks that had been so deeply committed to financial engineering and mortgage bond fraud. We became so committed to rescuing and saving the big banks that we allowed, through neglect, the destruction of the U.S. economy. I mean, these are very strong statements. The transition was boasted by Greenspan in the 80s and early 90s, in the mid-90s too. He called it financial engineering. He said, we've got some tremendous advantages for offloading risk. No, he didn't. We got the subprime mortgage bomb that blew apart the U.S. banking system. Greenspan is the architect of this destruction. Now he's heralding the destruction of our economic system as though he's some kind of a good guy. He's one of the architects of the destruction. So when the big banks, which dominate the banking system, so their statistics pretty much control the overall statistics and trend, when they're devoted less to capital formation in corporate credit lines, it's an evidence that the system is breaking. And this has been the case for 5 years. We've been breaking for 5 years. So now we're at the climax of the collapse. We're not getting out of this. I find it hilarious that for 5 years we've been on like fascist leadership orders. You must describe it as a sluggish recovery. Well, I prefer the truth and reality that it's a -4 to -6% recession every stinking year. I don't conform to orders that you must describe this as a recovery, so put an adjective on the recovery like sluggish or difficult or timely, time-consuming, or long-standing recovery. No, this is a deadly feedback-looped recession feeding on itself, and the evidence is coming through with the big banks. Normally, big banks are involved in capital formation, like a company saying we need a big business loan to expand our plant, to expand our operations. The other thing that big banks had been doing, but aren't anymore, is investment banking. A company wants to expand. Instead of going for a commercial loan, they go for a lower cost solution, which is issuing stock. When they issue stock, they don't pay interest on what they draw in for the funds. They put it to work, and they pay income taxes on it from new income. They do hiring. They post messages out there hiring 2,000 people. No, the result of what we're seeing right now with the lack of business investment and the lack of capital investment, like with stocks, investment capital, is we see Intel layoffs of 15,000. We see Microsoft layoffs of 20,000. IBM layoffs of 10,000. Christmas and what's the name? Christmas and Gray. There's another name in there. Anyway, Christmas and Gray. There's one other name. Put out a statistic all the time, every month or every quarter, and they're setting new records for large business layoffs. We're seeing the destruction. We're seeing the deterioration. This is really tragic, Elijah. And now you're seeing a huge round, a painful round of the energy sector slamming the credit portfolios of the big banks. Why would they go out and lend when their main portfolios are losing tremendous money? So when the banks are losing money, they're not lending. They're losing money partly because of QE, which I call a death warrant to the US dollar and the economy. But they're also losing a lot of money because we're in transition from the petrodollar. The basis for the dollar is changing. We're changing now to pure QE Zimbabwe monetary policy rot. That's the basis of the US dollar now. African money printing. And it's appropriate that we've got an African in the White House. And now apparently we're getting a lot of Muslims from North Africa and other points just shoved and planted all across the United States without proper immigration approval and all this. So thanks, Mr. Kenyon in the White House. Thanks for throwing Muslim garbage all across America and Europe. Mission accomplished. I love that mission accomplished from the moron president we had, Bush, too. We're setting low standards for American presidents, and notice that when we try to get a different kind of president who doesn't like the current system, we get a lot of flack. So I guess we don't want to really talk about politics. I sure don't, but we're seeing a transformation toward third world, Elijah, right in front of your eyes.
No, I was wondering if you could expand a little bit more about where, if the financial institutions are not loaning to businesses that much anymore, what are they doing with their money? Are they just speculating? And if so, what effect does this have on the economy?
Yeah, they're speculating. They're doing a number of things. Let's just focus on, say, that the biggest of the banks, Wall Street banks. Now, I've mentioned this before. They've got some activities that are not constructive for the economy. And our central bank clowns who control monetary policy African style are applauding themselves, patting themselves on the back, giving themselves praise that the big banks are gradually recapitalizing, which means they're starting to make some money. These giant hollow towers, these insolvent towers, here's what they've been doing. they take the 0% money that you cannot borrow at 0%. They immediately invest it in the 10-year bond. Let's just say it earns 2%. So they're earning 2% without doing any work, without investing in a company, without investing in capital, without involving any new hires. These same big banks that are doing this bond carry trade, that's what it's called. You borrow 0% and you go ahead and invest at 2%. They're not hiring a lot of new people. In fact, they're laying a lot of people off because their entire mainstream large chunk credit departments, credit portfolio managers, business loan departments, they're all cratering. Why? Because they're too much involved with financial engineering, too much involved with bond fraud, too much involved with these derivatives. Okay, so the big banks have been borrowing at 0, investing at 2%, making the 2% profit, but they do something even more. They buy the Treasury bond futures. So they add 25 to 30-fold leverage on that. So they're making 50 to 60% on their borrowed money straight from the Fed's window at rates that you cannot borrow in a manner that does not help the tangible economy at all. Yet the big banks are starting to make some more money in the last few years, 2 or 3 years, and building up their capital. While they make money with the bond carry trade and the casino side, they're losing big money on the tangible economy. So they hate the tangible economy. They have got rules inside Wall Street Bank. Do not lend to the tangible economy. And Wells Fargo violated that by lending in a huge way to the shale industry. Wells Fargo has the biggest exposure to the shale industry. So Wells Fargo is dying. But that's okay. You're allowed to be dead in the United States as a bank because you've got these tremendous lifelines that come on called QE. And there's a lot more than just QE. It's just huge credit lines behind the scenes where they take their rotten bonds that are worth nothing, and the Fed redeems them. So it shoves money back into the big banks. And that's why the Federal Reserve has this $4.2 trillion vat of paper swill toxic junk that includes a good deal of treasury bonds. I do not distinguish between, say, energy company impaired debt and, say, other company impaired debt and, say, mortgage bonds that have gone bust and worth nothing, and also the U.S. government debt. The U.S. government is now operating like a third world country. They're printing money like Zimbabwe. They're warring with all their friends and enemies. They're legitimizing bond fraud in the big banks. They give fines to the big bank, multi-billion-dollar violations without charging anybody with a felony. They don't liquidate the criminal organizations. Oh my gosh, third world, here we are. So what's the effect? What's the effect on the economy? Capital destruction, which is accelerated by QE, the hypermonetary inflation, without any sterilization. What that means is they're not pulling money out of the system in order to rescue these U.S. Treasury bonds to finance our government debt and to finance also some of the dead toxic mortgage bonds that the big banks have been saddled with. QE is nothing more than a backdoor Wall Street bailout to make it look like stimulus. It's very stimulative for the corrupt big banks, and it's very destructive for the U.S. economy. We've had no recovery at all since QE, and furthermore, here's kind of like the pulse. Money velocity is down something like 55% since Lehman. Where's the stimulus, Elijah? QE is not stimulus. It kills capital. It forces all kinds of financial institutions to invest in tangible assets as protection from the inflation, which raises the cost structure, which reduces the profit margin, which closes down business segments, which lays people off. That's the sequence of the deadly destruction of QE. QE is a death sentence for the dollar and the U.S. economy. Plain and simple. No ifs, ands, or buts.
Now, still on the topic of, that we're witnessing basically the destruction of capital and the end of capitalism, I was reading the article that I cited at the beginning of the interview. When I was reading it recently, it noted about how, according to a poll conducted by the Harvard Institute of Politics, only 19% of Americans ages 18 to 29 call themselves capitalists. So it seems like we're seeing the next generation of workers, they don't even care about capitalism. So if the overwhelming majority of the younger generation of American workers do not consider themselves capitalists, what do you think this means for the future of capitalism?
Well, you can't. There's a great quote from Ron Paul. I mean, Ron Paul gets a lot of flack. He didn't have a really strong, authoritative, manly voice, and for that reason, he didn't go far in the elections. But Obama had a pretty face, a young voice, and a tight ass, so he got a lot of votes. Okay, Ron Paul has a great quote. He said, "You can't blame this tragedy that's befallen the U.S. economy and nation on capitalism, because we haven't had any." What a great quote! We haven't had capitalism. Capitalism requires a bankrupt, insolvent institution to be liquidated. But we instituted too big to fail banks. So if you get a new graduate from a top university and he or she has an economics or finance degree, gosh, they might want to go work for a Wall Street bank and take on a whole load of some bond carry trade responsibilities. That's not capitalism. That's a queer casino, cronyism, garbage system. Okay, what I've come to learn is that most Americans don't know what capital is, they don't know what inflation is, and they don't really know what democracy is anymore. They don't know what fascism is, the opposite. And as a result, what we're seeing, I believe, just my opinion, that democracy is kind of passé. Capitalism is kind of passé. Why would anyone want to work hard when he could just collect, say, $400 a week and get by for doing nothing on welfare? I had a client contact me about 3 months ago. It was a shocking message. It was I can't remember. It was either Northern Ohio or Southern Michigan. The fellow wrote me and said, "Jim, I just had an awful experience in the last 2 or 3 months. I put out notices to expand my floor cleaning business. I wanted to hire about 40 or 50 people because I won a bunch of contracts. I saw some green fields out there, and I wanted to expand and hire people and make a bunch of money." And I was absolutely astonished what happened when I put out the word and made notices and advertisements and paid for the columns in the newspapers and online ads and everything. He said almost 80% of the people who responded and came into the office were either on welfare and didn't want to get above 20 hours a week of work, or they were heroin addicts. Now, the untold story about the U.S. economy and society is that the Afghanistan war has resulted in a tenfold increase of heroin pouring into our cities with an origin of Afghanistan under U.S. government agency supervision. So what's happening to our economy? We're becoming a welfare state alongside a heroin state. That's what's happening to our economy. And people who are trying to build a business are crashing into the reality that most people don't want to work because they're on government supplement, while the rest are on heroin. Now, this is, you might seem, oh, Jim, you're exaggerating a bit. The guy said about half the applicants that he had were admitted heroin addicts. My gosh, what is coming to our nation? We're seeing the degradation and the slide into the third world. All it needs now is its separate currency that's not the global reserve currency dollar, so that it can be devalued like it deserves, like a third world nation currency deserves. And what great characteristic does the United States economy have to deserve regular and frequent devaluations like Venezuela, which Greenspan used as an example of what the United States might become? What is the big trait of a third world nation? A huge trade deficit. We have 40 billion a month in dollars deficit per month, which means about $500 billion, $500 billion per year in trade deficits. So once we get our U.S. only currency, expect that we're going to get a sequence of 10, 20% devaluations, and then you'll recognize the third world nation a lot better.
So as we're seeing all this kind of financialization, as some people have called it, what does financialization in the U.S. do to our standard of living?
Well, when people aren't working because they're gambling, when people are on heroin because they can't even maintain their own equilibrium in their bodily processes, they become dependent on the state. What do we have, 48 million people on food stamps now? What was it in the year 2000? Was it half that? Was it a little over half that? What happens to the standard of living? We become poor. Okay, this is not just casinos. Alongside the casino is the whole stock market issue. But also, remember, in 2001, Greenspan came out and said, borrow money against your mortgage. Keep the economy going. Keep your consumption going. Why, any economist or central banker would advise consumption rather than investment. He did not say, go out and start a company. Instead, he said, borrow money against your house and keep spending. Wow. We become totally backwards in our intellectual elite. They're dedicated to fraud. They're dedicated to monetary excess, and they're not dedicated to capital formation. Why work for a living when you can just manage your mutual funds? Why should a bank work through hard decisions on capital layouts with commercial loans when they can just borrow 0% and invest in 10-year bond and make 2% and multiply it by 25 by putting on a bond futures contract? There's no work there. Why work? The United States has become a lazy nation of fat people and drug addicts who now depend on the state. This is the first election I can ever remember. Well, the 08 and the 12 elections for Obama. It was the first election I could ever remember where the majority and the masses were the welfare state. I would really like to know what percentage of votes Obama got from people who did not have a job. I think it's over half his votes. So the standard of living goes down because people lose their jobs. Just think of Intel, IBM, and Microsoft. They're laying off almost 50,000 people. Now, that's just a symbol because you've got thousands of small businesses that are laying people off. And furthermore, this is not a financialization argument, but the insanity of Obamacare is operating like a massive wet blanket on small business. They do not want to continue growing so they would hit 50 people in their employee ranks. They don't want it. They don't want to qualify for Obamacare. Obamacare is so insidious that if you've got a small company that gets bought by a bigger company, instantly they become eligible or requirements for Obamacare. So it doesn't matter that it was a small business, it's now part of a larger organization. So what's happening to the standard of living? Well, naturally, when I didn't get to the climax point there regarding borrowing money against your home and consuming. The analogy, it was just wonderful. The metaphor was, well, what people are doing is they're burning their furniture. They're borrowing home equity and spending it on, say, a vacation or an extra car or who knows, a boat. And that's not constructive. That does not add to their income potential. So they wasted money on their home loans. And then can you remind me, Elijah, is it correct to say that 09, 10, 11, and 12 were dominated by home foreclosures? Yeah. Okay, so the financial engineering had a backfire of removing home equity wealth from the American public while QE went out and destroyed business capital. The big 1-2 punch. And now we're facing the third world with $500 billion in trade deficit that we cannot finance. And I guarantee you this, if we ever get to a U.S. domestic-only currency, and it's backed by resources like, say, 20 coal mines, 80 natural gas deposits, the strategic oil preserve, numerous different mining properties with copper and metal and strategic metal deposits. If that's what backs the dollar, then that'll all be owned by foreigners in 3 years. Because $500 billion is the deficit per year. $1.5 trillion would be what goes out of the country to the people who have invested in our country. Deficits kill the host. QE kills the monetary host. Too big to fail kills the economy. We're doing all the wrong things on our official policy, Elijah. Every conceivable wrong decision we are making. And now the symbol of the Obama legacy is the multi-sex bathrooms in the public. That's the Obama legacy, which was preceded by a massive campaign for the 2012 Sochi Olympics, or was it 2014? 2014 Sochi Winter Olympics, where he got into a tiff with Putin over gay rights among the athletes. What did he want to do? Condone, fellatio in the men's rooms? To get along between nations? I mean, Obama's legacy is going to be one of the biggest jokes in the history of modern mankind.
So my next question would be, besides in the United States, is financialization happening in other parts of the world? And if so, what effects is that having?
The same destructive events and effects. The European Central Bank. Okay, let me describe a little debate I got into with a mentor of The Voice. The Voice called me up one day and said, "Look, I want you to give this guy a free subscription. He's kind of a mentor of mine. He's an older fellow. He's a very smart guy. He's an ex-CEO of a big European company." I said, "Okay, and he'll share with you things, Jim." I said, "Okay, but will they be translated into English?" And he said, "Well, I'll make sure that happens." And he did. I got into a debate with this fellow, the mentor. Let's call him Voice Mentor. And he said to me that the European Central Bank, this was back in 2009, the European Central Bank would never follow the Fed and go down to 0%. Near zero. Approach the zero bound, whatever. If we're at 0.25%, Eli, I call it zero, okay? It has almost the same effect as zero. It's a lot closer to zero than it is to 1. And 1 is almost nothing for price of money. So cost of money, price of money, it's a total joke. Anyway, this fellow, Voice Mentor, told me the European Central Bank will not go down to zero and follow the Americans. And I said, well, that has a very immediate consequence, and it's going to be evident rather quickly. The euro is going to move over 150. And he said, well, we'll see. Well, it went to 160, exactly as I expected. And then I wrote to him and said, dear Voice Mentor, now you're going to have your Euro Central Bank follow the Americans down the wrong path towards 0%. And that'll relieve your export problems, like, say, for Germany and the other export centers of Europe, because the euro will come back down. And it did. It went back down to the 120 range from 150, 160. Boy, did I get that right. But I put at risk a relationship with the mentor to the Voice. So about 6 months after that, I wrote the Voice and said, could you contact so-and-so and tell him that, I'm not saying I told you so, nah. I'm just professionally stating that what I expected to happen did happen, and the rest of the world is following the United States down the wrong path of easy money and free money. The free money is 0%, the easy money is QE. It's not easy for you, it's easy for the financial institutions. So the entire world is going to follow the U.S., and they did. The Bank of Japan did something even worse. Well, I shouldn't say they did it. They were subjected to something even worse. It was around September of 2014. Yeah. The U.S. announced that they were going to confiscate the Japanese government pension fund, which was valued at $1.2 trillion, and they were going to use it to buy treasury bonds. So that financed a whole year of government deficits for the United States. And what was Japan's reaction? Well, they're a slavery state, so they don't have a voice. That should be remembered by people, and most people don't understand that. Japan's not independent. They're a slave state, kind of like Germany, but Germany's got bigger muscles. Japan announced that their central bank, the Bank of Japan, would replenish the $1.2 trillion in the government pension fund by printing what they called infinite QE. They actually had the balls to call it infinite QE, reality. Okay, so I made a call, instantly said that the Japanese yen would fall 20%. Got that right. Took about only 3 months. Okay, that's not all. You got the Bank of Japan, you got the Euro Central Bank following the deadly tunes from the Fed. But there's more. The Fed decided that if they bought too much in the way of treasury bonds, that they would have a gigantic bloat on their Fed balance sheet. Well, they do. It's $4.2 trillion, and probably 3/4 of that is U.S. government treasury bills, treasury bonds. So the Fed did something very clever. They created the BLICs, Belgium, Luxembourg, Ireland, Cayman or Caribbean, and Switzerland. Well, the BLICs turned out between summer of 2012 and the end of 2014, turned out that the BLICs bought as much treasury bonds as the Fed. The Fed doubled their treasury bond purchases by exporting using their stations in those 5 nations of the BLICs. So when you ask, besides the United States, is financialization happening in other parts of the world? Well, yeah, we've got the BLICs expanding the Fed's own QE purchasing. We're talking about $400 billion of treasury bonds purchased by these tiny countries. We're now at a point where Belgium and Ireland each have more treasury bonds than the size of their entire economies. And you also have Japan, Euro Central Bank. So we're exporting this contamination policy. It's contaminating because it brings about the creation of toxic paper, toxic bonds. It brings about the destruction of bank credit portfolios. It brings about reduced profit margins and company layoffs. In other words, companies dying, business lines dying, layoffs, job cuts. So we're exporting our poisonous monetary policy. I saw a good article this morning. It was about how the East is now preaching that the West is guilty of contaminated economic and financial thinking. Yeah, look at what our leaders have been saying for the last 6, 8, 10 years. What we need is to put more money in the consumers' pockets. Is that not the message, Elijah? Yeah, that's the message. Now, is that constructive? Why didn't they say, Americans, go out, take some risks, start building a business, start low, start ambitious, build, hire, make country great. Instead, we need to put more money into consumers' hands and pockets. And where does it come from? The printing press. The United States is becoming Africa and starting to look like Africa.
Well, Jim, Willie, thank you so much for giving us your time today. Before we let you go, did you want to share with the viewers where they can find you on the internet and subscribe to your newsletter if they're interested in finding out more?
Okay. I just in April had the 12th anniversary for the Hat Trick Letter. Now, this is a labor of love. It's a lot of fun. It's also exhausting at times. I found that last year I was more exhausted than I am this year. I don't know why. I just don't know why. Anyway, the website is www.goldenjackass.com. No hyphens in there. goldenjackass.com. Bounce around in there. There's a lot of free material. I had to do an editing, so all the free material in there is from last July onward. I had to lose a bunch of stuff in the past. It was kind of an accident. We hit a limit on capacity, but for the website, and that's okay because we still have about a year worth of interviews and public articles, and I do have a couple links in there for archives of public articles. They go way back, like to 2000. And I think Gold Eagle goes back to 2005 or so. But bounce around, look at the interviews, podcasts, look at some of the public articles, and some people are not new to this. They're not new to the gold world and all the topics. So, just bounce around, refresh yourself with some things, and sign up for the newsletter. If you're new to this, do a little more studying and check out a little bit more, but sign up for the newsletter. The Hat Trick Letter's been around 12 years, and it's been a lot of fun. This is one of the most interesting jobs I've ever had. I must admit that I do miss being a statistical analyst. I do miss tackling large data sets and coming up with interesting conclusions and business plans and reactions for various things. That was a lot of fun, but I moved on, and I'm doing something that I think is historically significant potentially, and that is the final sunset years of the dollar and the reign of terror that it has wielded upon the world. So the newsletter itself has two parts. There are two different monthly reports within the newsletter. The main one is the Global Money War Report. It's for big topics like dollar abandonment, big topics like gold currencies coming into view, government bonds and fractures that are taking place right now in the treasury bond market. We have open fractures now. QE has finally had an effect to wreck the bond market. And it's getting extremely interesting and messy and dicey, dangerous. The second report is the gold and currency report, which focuses a lot more on the actual currencies, a lot more on actual supply and demand for gold, like mint demand, coin demand, import demand in India, and a lot of supply issues like shutdowns of mines because they're not profitable anymore. So the two reports within the newsletter are very different. There's a little bit of overlap though, like with the banks. I tend to put China and Russia and banks in the second report because it just doesn't have quite enough material. Just gold issues, not enough material. So I try to cover the 6 or 7 or 8 different areas of economics and finance. And I tell you, it's a lot of work. But I'm extremely grateful to my team of 10 colleagues that come from various different professions. Some of them are extremely smart and full of insight and add to the value of the newsletter. But I'm also grateful, this is a real important point, Elijah, I'm grateful for the 30 to 50 clients, and some are not clients, they're just followers. But they like to communicate with me, they like to send me interesting information. They like to send me, today, for instance, I got a message. I don't think he was a subscriber. He was from in Contact Us, for the news. I'm sorry, the website public window, and he was from Switzerland. And he said, Jim, I want to let you know I buy a little bit of silver bars every month. I don't know if he means small bars or kilogram bars. But he says, I buy silver bars every month, and what I'm now noticing is a really big change in the sequence for the bar numbering system, the serial numbers. And they have a lot more scratches on the sides. And he concluded, they're reaching the bottom of the barrel in the Swiss banks to satisfy demand. Okay, so there's a lot going on. I'm very grateful to public contributions, whether they're from just people out there, not clients, followers I call them, or whether they're actual subscriber clients. I've got 30 to 50 of them, and every single day I read at least 6 or 8 pieces from what I call the news hounds, or one friend of mine says, Jim, they're elves. They're elves helping Santa. Well, yeah, in a sense, yeah, but they're not small. And some of them are really smart people. And they go back and forth saying, what do you suppose this means? And we go back and forth, try to digest it. So the public contributions, including clients, actually add to the quality of the work. And this is amazing. It's like a big road show. And I love it. I never get up in the morning and think, oh gosh, another day, another dollar. No, I didn't think that at Staples from 95 to 2000. And I don't think of it now. I'm excited to get up and look, but usually there's some disappointments because banks block renewal payments. Why? Because they can. Don't ever use a Wall Street bank to sign up for a credit card, to sign up for the hat trick letter. All right, so that's the story. That's the website background, the newsletter background, and it's a pleasure being on, Elijah.
Definitely. Thank you so much for your time. This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Brother John F. Former futures broker, stockbroker, and technical analyst, Brother John F. joins Reluctant Preppers for the first time to examine the real story behind the Puerto Rico default and what it signals for other U.S. municipalities and the U.S. itself. Where are gold and silver moving next? And can technical analysis even be used anymore in a highly manipulated market? Finally, who is the real Donald Trump? What will he do to America as a president? And would he crash the U.S. financial world to shake out the ready-to-fail banks and reset the system? This interview is not to be missed.